How's everybody doing today? And welcome to Trending Thursday. Today's going to be a little bit different than normal. Joey's not going to be with us today, but we've got myself, Clay, and Glenn is here with us. Glenn, how you doing today? I'm doing great, Glenn, man. I'm excited for this. I always get excited when I get to do Trending Thursday with you. Yeah, Glenn's unmuted.
I'm sure. Sorry about that. Did you set? No.
All right, hopefully we get all the audio straightened out now. Guys, let us know in the chat. See if everything's good now. Like I said, it's a little bit different. That's why we're so thankful for Joey, man. That guy takes care of everything. We don't have to worry about anything. But if you can hear me, Glenn, let's hear you say something too. Make sure everything's
Check
going
1
smooth.
2 to VV Nation. Check 1 2. Cam says this is the first time you've been quiet, Glenn. So
Trust me, guys. I can hear him. He's not that quiet.
hopefully you guys can hear me now. I hope so. Yep, all clear, says King Monocore.
Awesome.
Excellent. All right, so we're good to go, Clay.
Perfect. All right, so as long as we're good to go, Glenn, I'm going to hand it over to you, man, wherever you want to start, and let's just get this thing rocking and rolling.
All right, so we always start off Trending Thursday by looking at what's going on in the market. So why? Because VectorVest is all about a trading trading system of knowing when to buy, what to buy, and when to sell. So we're going to always start off with market timing because that's one of the biggest things that we do that most people out there can't do. And if we look over to our indices today, we have a mixed market. The NASDAQ is up, the S&P 1N 500 is up. The VectorVest composite is up. The only thing that's holding us back today is the Dow Jones. It's down a little bit, about 0.1% today. So we got a little bit of a mixed market, but something that you'll only find in VectorVest is an indicator called the MTI, or market timing indicator. That indicator lets you know from a VectorVest perspective when the market is starting to look for a top or a bottom. Right now, the MTI is at a level of 1.7 today. The MTI is on a scale between 0 and 2, and it looks at what we call the underlying trend of the market. But when the MTI gets to a level of about 1.5 to 1.6, the market is at a level where it's looking for a top. We are clearly at that level. So you'll see that the market will show signs of going up and going down and that kind of a thing. And Mike is right on point when he says, keep your eye on the MTI. And I think we need to flood social media with that. Hashtag keep your eye on MTI.
That does sound good.
It does sound good. I think that it's a great perspective so that people know what's going on behind the scenes. The market may look like it's going up. Some days it looks like it's going down. Maybe we get into a sideways trading market. That MTI lets you know if you're still trading stocks, tighten the stops on your stocks. All right, so that MTI is important. Looking at the color guard, still we got a close mixture of both green and yellow, giving us more of a feel of starting to just be a little bit more cautious in our investing. Never once do we tell you, stop investing. We are going to tell you this is a time to at least be cautious in what you're doing. Don't get caught up in the hype. If you see the market going up a lot, don't get caught up in the hype. Let VectorVest teach you and help you understand not to put all your money out there in respect to that. So that's what's going on from a color guard perspective. That's what's going on from a market perspective today, and that's what's going on with the MTI. Well, what do you do? Well, what's making the market move in the direction that it is? Let's go to our first story, Clay. Whereas I always look at stories that affect the market, And there's three things that move markets globally: earnings, interest, and inflation. Those are the things that move markets globally. But in the market that we're in right now, the Fed is trying to do everything that it can to make sure that the market doesn't go into a free fall to the downside. So the Fed's job is to make sure that interest rates are low and that the workforce is working. U.S. unemployment claims rise amid coronavirus surge. We're getting into the winter months. The flu mixed in with coronavirus. This is going to be a very tricky winter this winter.
Absolutely.
All right. But the interesting thing is that we are getting news of a vaccine or a couple of vaccines that may come out soon. I had someone send me an email about the process behind actually getting these vaccines out to people. And there's a lot entailed in it. There's a lot more than just the news that you hear. So you hear that Pfizer's got a drug. You hear that Moderna's got a drug. You hear that, we're going to talk about a little later, that AstraZeneca's got a drug. These drug companies are vying to be the ones that get a vaccine out to the people. But what you don't understand is that there's a lot more behind trying to get that drug out than just the news. All right, so that's something that I'm probably going to do in a future Trending Thursday. But right now, the job number going higher than what was expected shows that we have a slow recovery going in to these winter months. And could that be a good thing or a bad thing? I think that if we get rising jobless claims, that's not going to be very bullish for the market. But keep in mind, VectorVest already has that indicator that's saying that the market is looking for a top.
Absolutely.
So really right now, I think what we're looking for is some kind of a catalyst for the market to turn back around, but it's there that the market is already looking for a top. Just keep that in mind. Do me a favor, Clayton, get back into the software for me.
I'm there.
And I want you to go to the watch list. All right, so we understand what's going on in the market by way of what we saw today. We also saw what news is driving the market. What Clayton's going to do is he's going to highlight the SPY, and he's also going to highlight the VVC, which is somewhere in that list. There it is, right? He's going to highlight those two. Those are the two indicators that we use for timing the market. If you're not a subscriber to VectorVest, we use the SPY. If you are a subscriber to VectorVest, we use the VVC because it looks at a whole lot more stocks than just the 500 stocks in the SPY. Right-click on either one of those for me, Clayton. And I need them both highlighted, though.
Oh, sorry.
That's all right.
Want to graph it?
Yep. View the stock graph. And that's the market, folks. That's on the S&P. Put it on a 3-month graph for me, please. That is the S&P 500 shown over the last 3 months. We have a moving average of a 20-period moving average. Yep, EMA 20. General rule of thumb, when the SPY or the spiders is above the 20-day exponential moving average, it's okay to be in the market. When it's below, it's a nice time to be out of the market or playing the market to the downside. We can clearly see that we hit a high about 6-7 days ago. We're coming off of that high, but still above the 20-day exponential moving average. All right, that's a positive sign, but don't lose sight that it's pulling back a little bit. Look at the volume. The volume has been pretty steady. And look at our indicator, RT, above the value of 1, the market's in an uptrend, or the S&P is in the uptrend, and below 1, the S&P is in a downtrend. So we still see that the market overall is moving higher, but it is starting to pull back. Thus, caution is advised. I'm not going to tell you not to pull the trigger on any trade that you see that you can make some money on. But understand, this is more of a trade situation because the market's looking for a top. Go to the next the next one for me, the VVC. Looks pretty much the same, except for it tracks over 8,300 stocks. Thus, the reason as a VectorVest subscriber, you have access to this indicator to give you a better perspective of the broad market movement. Now, for those of you who are not subscribers to the channel, hit the subscribe channel hit the subscribe button for the channel. But for those of you who are not subscribers to VectorVest, Joey in the background hopefully will put a link, either Joey or Clay will put a link for you to take advantage of a 99-cent 30-day trial. 99-cent 30-day trial. Exactly, Clay. I feel the same way. 30 days for 99 cents. Someone in the background should put that link out there for you. All right, so if you want to see the VVC, like you see on this graph that tracks the movement of over 8,300 stocks, it really does give a better perspective of the broad market movement. We're coming off a high from yesterday. We're still got a green up candle today. We are still, actually the VVC looks a little bit more bullish than the S&P 500 does, doesn't it?
Yeah, slightly over the last 2 weeks or so.
That's absolutely right. But remember, this indicator is tracking over 8,300 stocks. All right, tracking over 8,300 stocks. And Lauren, guidance on gold. If you're a VectorVest subscriber, we do a gold story every Monday to tell you where we are on gold. And currently, we are bearish on gold. We are bearish on gold. But as a subscriber for 99 cents, you will get access to that information every Monday.
I mean, yeah, Glenn, the amount of information you can get for 99 cents, I mean, it's absolutely ridiculous. If you want something that's worth the money, I mean, we could make it a free trial, but goodness, that's 99 cents. If you don't think that you can get the value out of that 99-cent trial, I don't know. I mean, just having the picture of the app, just having the app open on your phone is worth 99 cents, but
amen to that.
There's so much that you can gain from it.
All right, so that's the first story. We always start off with market timing, and now, Clay, it's on you for Clay. Today, Clay is going to have the majority of the stories. I will just chime in, but today, again, Clayton is the guy that's running the show. I'm here in the background helping him.
Well, yeah, I don't know how far I can run this show, Glenn, but I need you here, man. I need you here. We'll start off with that. So I went through and I was looking for a bunch of different stories, that we could talk about today. And one of the main focuses that the majority of these stories are going to focus on today is mobile payments and just mobile money, essentially. And I came across this story. It was one of the first stories that I came across, and it's a good intro to what we're going to be talking about today. And it's not something that I've really thought about before, and maybe you haven't thought about it either. But the headline was Zillennials, and I thought, what in the world is a Zillennial? First off. But it's Generation Z, and I'm not too good on when you have to be born to be Generation Z or X or so on and so forth, but I think it breaks it down a little bit further in this article here. But it says Zillennials are going to change investing forever, Bank of America says. So with that being said, we can come down here, and it goes a little bit through what this Generation Z and what these Zillennials are into, what they're comfortable with. And it says stuff like eating meat is out, flight shaming is in. Generation Z is transforming the world, and investors need to be prepared. Well, right off the bat, if I want to be prepared about something, that's going to catch my attention. So we talk about Zillennials and what they're comfortable with and what they like to get into. And there's not too many stocks in this article. It doesn't really point out too many stocks. But it does say that a lot of them are, it says like 40% of Generation Z is more comfortable with talking and interacting with their friends online than they are actually in person. So they're much more likely to interact with all of their friends and associates and so on online than they are in person. Now, Generation Z is the group born between 1996 and 2016. So, if I'm not incorrect, hopefully my sister's not watching this right now, but I'm pretty sure. Actually, I don't know. She might be 1994 now, so no, she might not even make the cut on that. But, so in that case, I might not know anybody that's a Generation Z or interact with too many people that are Generation Z. But it says, this last sentence here, sectors that will benefit include e-commerce, payments is a lot of what we're going to talk about today, luxury, media, and ESG, according to Bank of America, while areas like alcohol, meat, cars, and travel could possibly suffer. So, they went through and did this whole big study on what Generation Z is into, and I also found it interesting that there's going to be an increased focus on Asia Pacific because it currently accounts for 37% of the Generation Z income, and that's set to rise to 41% by 2040.
That's a lot of folk.
Oh, absolutely, man. When you're talking about 37% of the money being focused in Asia Pacific, we're gonna have to change our focus from maybe the U.S. or different cultural aspects that you're talking about when you talk about Asia Pacific. And just a few more. It's got a couple more statistics there. Like I said here with this 40% of the 16 to 18-year-olds would rather interact virtually with friends. And it's comparing it to the 35% of millennials and 30% of Generation Z. Glenn, I have no idea what generation you are, man. A? You might go all the way back to Generation A? Is that right?
Wow. I'm going to punch you. I'm Generation X.
Virtual punch, right?
Well, I'm a virtual punch. Yeah, I am. I don't have my soundboard with me. But I'm Gen X.
Gen X, okay. All right. I would be a millennial then, so I think we got a couple different generations going on here, guys. So a couple different perspectives, but I thought this was really interesting. And after looking at this article, it made me start thinking about these payments because I look through a lot of articles just in my day-to-day, and I've been noticing a lot of stuff about like Square and Google Pay and different stuff in that aspect. And my dad, he uses Cash App for a lot of stuff, and it's kind of funny to think about my dad using Cash App, but
I use Cash App for my kids. My kids, because they don't live nearby, they're in Florida. Anytime they need money, I Cash App them money.
Well, there you go. I mean, it might be hard for some people to think, my grandpa, he would never do anything with Cash App. He would hand me a 20 before he would ever even trust an app to do anything with his money, but that's the direction it's heading. We can look at, my grandpa, to Glenn, to me, to this Generation Z, and we can see, a transition from cash payments to what's going to be, in my opinion, one day it could be 100% mobile and 100% virtual. So Cash App is by far a household name now, and Google is moving into the scene, and it's making some waves. And down here in the article, it says Google now lets users open a bank account through its Google Pay app in partnership, of course, with Citi and Stanford Federal Credit Union, and that's going to be starting at the beginning of next year. So Google's actually going to get into bank accounts, so you're going to be able to keep your money through Google. And the tech giant is relaunching its payment app. Now, I do have Google Pay, or I did use Google Pay, I think, one time, but it never caught on for me. So maybe with this relaunch and this revamp, they're going to start making some waves and cutting into PayPal and Square's market share a little bit.
Well,
but
I use Apple Pay on my phone.
Apple Pay, okay.
That's what I use. I use Apple. I'm Apple everything, but I use Apple.
Of course. See, and that's like I say, one day this could all be virtual, and people could say, cash, what is cash? Why would you ever use paper? Somebody could just take it from you, no? I mean, there's an argument on both sides, obviously. But it's going to have a broad appeal, especially among younger population, the Generation Z, that's more tech-driven and mobile-focused. So this article isn't even related. It's not by the same people. But, of course, they're relating this back to Generation Z, who is completely tech-focused, and they're okay with not being able to have that cash in hand. And, of course, if you're going to Cash App somebody some money, who's going to say no to that, right? So, with that being said, Glenn, I don't know. Do you want to go through any more of these articles, or do you want to go back and, you know what? This next article is
let's go to Square. And I can relate to Square. I can relate to Square because a lot of you know that I'm also a mobile DJ. And Square gives the opportunity to pay me without having to give me cash. So I like it, and it's a stock that's been taken off for a long time, and for the same purposes, the ease of getting money from one person to another.
Absolutely.
Right? And without having to whip out cash or write a check or anything like that, swipe your card. So, swipe your card. It goes to my bank account right off of my phone or my iPad, right into my account, and there you go.
Absolutely. And, this article talks about Square rising as Google's facing a couple of headwinds as it's trying to launch this new app and getting it out there. And it basically just said, I would consider Square possibly one of the leaders right now. Cash App is, you know what, I read an article maybe last week or so, I forget the numbers now, but Cash App is a huge part of Square right now, and it's literally the driving force behind mobile payments. But with this article, it says that Square gained 3.5% in pre-market trading after KBW Sanjay, sorry about your last name there, said it's too early to tell if Google Pay's redesign is going to turn into a financial super app, and if it's going to pose a threat to Square's Cash App and PayPal's Venmo. So with that being said, I don't know, Glenn, you want to jump back into the program and see what these stocks are looking like right now?
So now the news is there. Let's go take a look at them. So you'll find them.
Yeah, so we got Google right here.
Okay.
I'll highlight a couple of them right now just so we can kind of see them a little bit better. We got Google, PayPal, and Square. I think that might be all. Yeah, I think that might be all that we had in here for the mobile payments.
All right, let's break them down real quick. We'll go through price, and we'll go through one indicator at a time. So on this story, we'll use RV, but we'll look at price and value.
So right off the bat, if I'm going to start with Google, Google's a very high-priced stock. It's currently trading at $1,751 per share, and it is overvalued. The value that we currently have is $1,694. So is it drastically overvalued? I would say no, definitely not at this price. This is a huge price stock, so it's not absurdly overvalued right now, but it is overvalued. And Dollar Chains is definitely up today. It's up about $11 and up a little over 0.5%, fluctuating throughout the day. And we're going to talk about relative value. Relative value is at 1.04, and this is right around the 1 area. So it is relative value, like all of our indicators, are on a scale of 0 to 2, and anything above 1 is going to be good, and anything below 1 is going to be bad or bearish. Not necessarily bad, but it's going to be bearish. We want to see indicators that are above 1. So with relative value above 1 right here, this is, it's slightly above 1. So this stock would be rated okay for relative value. Glenn, you want to take PayPal?
Sure. PayPal, a little bit over its value. The stock is considered to be overvalued. It just means that people are willing to pay a premium to own the stock. We look at the relative value on it. Now, relative value is the stock's long-term upside price appreciation potential. Notice that if you look at Google with an RV of 1.04 and then PayPal with an RV of 1.41, PayPal's got a bigger upside potential. All right, it may not be as big as Alphabet or Google, but it's got some good upside, and that's a good thing. And then I'll do the last one. Square 193, value 30. That stock is grossly overvalued. All right, now in this space, more stocks are going to take off in this space. Square, PayPal, they're all in this virtual payment field. So even all of the stocks in that field will tend to rise because the industry is running. But this stock is way over its value. You look at the relative value on it, 0.58. The stock does not have good upside potential as compared to PayPal and Alphabet. So what Clayton will do now is right-click on any one of those stocks. We'll take a look at the graphs so that you know the news. Put on a 3-month graph for me, please. You know the news. What's going on with Google? Well, even with the news, it's pulling back to that 20-day exponential moving average. All right. And look at the volume on it. The volume is falling on it as well. So you keep your eye on it if you own Google. If you own Google, you keep your eye on it. All I'm going to say is probably tighten your stops. RT is above 1. That's a positive sign. But also don't lose sight of where we are in the market with relative timing. With the MTI. Always remember, no matter what stock you're in, whether I'm in Apple or not, that MTI is telling me to be careful. That's so important. Go to the next one. You analyze that one. Go look at the graph on that one. There's Square.
Yeah, Square, we got the next one. And I remember this one was the one that was drastically overvalued. What's it trading at? $193, and the value was around $30 per share. Now look, just because, now I'm not going to say go out and buy Square right now, but especially with it being overvalued like that, but just because it is overvalued doesn't take it off the list of stocks that you should be allowed to trade or that you should look at trading. Now, it might be a different story if you're talking about long-term investing and the potential's not necessarily there, but if you're into trading news, if you really like the mobile payment industry and you're thinking, wow, yeah, this Generation Z could drive a lot of demand, this mobile revamp of Google Pay could drive a lot of demand into Google Pay, especially if you can link up a bank account. These are stocks that you can trade. And of course, Google's a pretty good investment too. But these are stocks that you can trade based on the news. So with that being said, it has pulled back from a recent high, pulled back to its 20-day weighted, is it weighted? No, exponential moving average.
That's an exponential, yeah.
Yeah, so it pulled back to its 20-day exponential moving average and bounced back off of it. And today we see that it's rising again and could potentially come back up here and test this new high, and we could break out if we go beyond this new high. So right around $200 a share is a price where we could be getting into new high territory here. And we look at RT. RT's not only above 1, but it's rising as well. And today, maybe with all of the news surrounding it, we're trading on higher volume as well. Not too much higher than the average volume, I'd say, but it is higher than maybe the last week or so.
So keep in mind, as Clayton's story came out, it's talking about the Zillennials and their ability to be in this space.
Yes.
What we're looking at is stocks for you to take advantage of this space. So, you can say whatever you want to say. You know me, I'm not going to get on my high horse yet. But you know me, the story is the story. And what we're giving you is stocks to take advantage of the story.
Absolutely.
And for anyone, and for anyone who's talking about how the Trending Thursday is done this week, hold your horses. All right. It's being done this way for a reason. And I don't need to put the reason out, but it's being done for a reason. And I think Clayton is doing an outstanding job.
Well, thank you, Glenn.
Whether you agree with it or not is totally up to you. But this is what we're doing. All right. So we're still making sure Trending Thursday is here for you. We're still going to give you the information that we do every week. We're not skimping on that. Clayton is doing an outstanding job on making this happen, and he's doing it as a favor to me based on where we are right now. So that's all I got to say about that. Let's go look at the last stock, Clayton. Thank you, sir. Whoa! Yep. PayPal don't look to be the best of the
definitely trending sideways there, huh?
It is trending sideways.
Yeah.
So the cool thing about looking at a graph. All right. The cool thing about looking at a graph is you get to make a decision on which stocks in the space really do look good and which stocks in the space really need some work. And looking at that PayPal, that one needs a little bit of work. That one needs a little work. Would you say, Clayton?
I'd say so. And, when I think about mobile payments, PayPal is like the first one that pops into my mind. Just because I had PayPal first. I don't know if it was necessarily one of the first mobile payments to come out or one of the mobile apps to come out, but I had PayPal first, so that's kind of like the throwback or the classic when I'm thinking about it. So, with the news coming out on this, maybe it's not something that's necessarily going to move PayPal as much. It might be a little bit more steady since it's one of the first into the space, but I did notice that maybe it was last week or a couple weeks ago, and it could be right around this area here, PayPal started letting you buy Bitcoin and started letting you get into Bitcoin, just like Cash App does.
And Square was part of that story. I did that on Trending Thursday. Both of them are getting into Bitcoin, yes.
Yeah. So that could be, and I'm just speculating here, but that could be something around here with this move, because I know it was very recent when that took place. But something like that could drive it a lot more than a story, just about Google coming into the payment space.
And I'm with you that I've had PayPal. I think PayPal was the first one out there.
Yeah.
I've had PayPal, but I've never used it. And I don't
Really?
know why, but
Okay.
I do use my Cash App and I do use my Apple Pay.
Okay.
But the cool thing is the conversation going around about all of these different avenues or
Yes.
venues or abilities to pay. And that's what the story is all about. And these are the stocks that are taking advantage of that.
Yes.
So I like the story and I like the stocks that you got. PayPal, in my opinion, kind of went the way of eBay did. I think PayPal is still out there.
I still use eBay, Glenn.
I don't use eBay. I don't
Oh
use.
man.
Wow,
Yeah.
that's old.
That might be why I'm still using PayPal, because I still use eBay.
All
Oh,
right,
man.
let's go to the next story, my friend.
All right, let's close out of those. Let's get these stories back up here. Okay, and talking about Bitcoin, Bitcoin's the next story we got up here. And I just kind of wanted to tie this back in. Bitcoin's been in the news lately. If it hasn't been in your news feed, I don't know what's going on. But Bitcoin is on a run. It's around, I think, $17,000. Actually, I haven't seen the price of it today. It could be higher, could be lower. But it was around $17,000, I think, last time I looked at it. And it's charging for that new high around $20,000 a coin. The price might be in here somewhere. It was $19,000 and some change. Yeah, $19,783 was the all-time high back on January 1st, 2017. And the Bitcoin bulls are looking to test that price again and hoping to break through it. So if we do start to see higher highs in Bitcoin and new highs in Bitcoin, look, I remember watching it 3-4 years ago, and when it started to run, when it started to climb up above 10,000, 11,000, 12,000, when it was making those runs, man, it was going up $2,000-$3,000 a day, and it just took off. Now, I'm not gonna sit here and say that that's potentially gonna happen again. We could get a lot of bears at that high price. Maybe some people are still holding on to it that bought it at those high prices a couple years ago, and they're looking to sell. Who really knows what's going to happen with it? But I wanted to bring Bitcoin into the picture because now a lot of people use it as an investment. A lot of people advocate using it as a currency and so on and so forth, a means for payment. But with the Zillennials, when we're talking about these Zillennials and what they're comfortable with, they're comfortable with cryptocurrencies and especially Bitcoin. It's not something that scares them. They're into the mobile payment space. They're into this mobile currency and not worried about the cash in their hand. So, maybe now maybe now's not crypto's time. Who knows? I'm not one to say that it is, one to say that it isn't. But as these Zillennials start to get jobs, as they start to get their incomes, and they start investing, this could be something that really takes off, knowing that they're more comfortable with it. So, Glenn, if you don't have anything else to say on that, I don't know if you want to go back into the...
Oh, yeah, I want to go back into the software because what we're going to do, we didn't have a specific stock to look at. So we're going to look at a watch list that I've created for Trending Thursday called cryptocurrencies.
Stocks, right?
Crypto stocks. Now, the biggest thing, as I saw eBird say, isn't Bitcoin real speculative play? All right. Let me put that into perspective. Bitcoin has been, or for the longest time since it came out, has been a speculative play. I think a lot of people still don't understand how it all works. But what is actually starting to happen is that the bigger names are starting to get into accepting cryptocurrency. As Clay talked about in Square, they're getting on board with it. PayPal, they're getting on board with it. And now we got a bank, JP Morgan Chase, is getting on board with it. So as you get more solidified big names starting to pull and say, we might want to go the Bitcoin route, it's going to start to gain some traction. Now, a lot of you will say, and I always know that there's a lot of people on YouTube who want to hear about Bitcoin all the time. all the time. You see it on the channels. You see it in here. You guys sometimes really want to take over my state, take over this and go, well, I want to talk about Bitcoin. And I've seen conversations in the background talk about Bitcoin. All right, let's talk about it. We have some stocks here in this watch list. We don't have them all. And BTC, which is Bitcoin, is not here. All right. Somebody says, Ebert says, I've seen a number of Bitcoin credit cards. Wow. See, again, It's picking up momentum. But from a speculative view for the stocks that you see here, look at how many are trading below a penny. So from that perspective, is it more of a speculative play? Absolutely. But when you look at a VectorVest watch list, the watch list is always sorted by our master indicator, VST. That looks at the RVRSRT, relative value, relative safety, and relative timing. That indicator is only available in the VectorVest software. The top stock in this crypto stocks is Riot Blockchain. All right, look at the VST. Out of the list, there's only 3, and this is 12 stocks that we have in here. There's only 3 stocks that have a VST, a combination of value, safety, and timing above the value of 1. ROIT, BTBT, and Mara. All right, and I know Riot and Mara, 2 of the bigger names in here besides BTC. But look at that. 2 of them, Riot and Mara, are both buy recommendations. Notice that both of them are above the value of $1. We talked about what relative value is, the stock's long-term upside potential. The next indicator we're going to talk about for these stocks is relative safety. Now, relative safety is an indicator of risk. Cast on that scale between 0 and 2. Notice that every stock in this list is risky based on that relative safety.
Yes.
Every single one is below. Does that make it a bad thing? No. But what does it tell me is that they are risky investments. So let's go look at the next indicator, which is RT. Tells you if the stock's in an uptrend or not. Notice that the both of them, and out of the 12, about half of them are in an uptrend with RT above 1, and half of them in a downtrend with RT below 1. So yes, it's a little bit more speculative. But with the news that's out there, as Clayton has brought up with those stories, with the Zillennials wanting to use that, Bitcoin could be on a rise. All right, even if you, so now, if you're a VectorVest subscriber, you want to jump on this, you want to get down on this, yeah, I'm not going to put all of my retirement money behind it.
Please,
but I can take a couple $1,000s to get on board with this, understanding that it is more of a speculative play. As quickly as these stocks go up, is as quickly as they can go down. As long as you understand that and you've got that mindset, you're going to be okay. I'm not throwing my retirement money behind this. But if the phase is kicking off, how about maybe Riot and Mara could be $20, $30 a few months down the line, and VectorVest from that perspective is telling you from the stories that it may not be a bad time to think about these, just invest, trade them appropriately. All right? What you got?
No, I don't know who was saying that they've been seeing a lot of Bitcoin or cryptocurrency credit cards lately, but I've definitely seen those too. I mean, I don't know if I'd get into that, but basically what it is you deposit your money into that cryptocurrency. So you buy that cryptocurrency, and what they call it is like staking. So you basically provide liquidity to that coin, and in return, you're allowed to, you basically get a debit card. You're using that cryptocurrency as your bank. So you deposit, I don't know, let's just say you want to use $1,000. You deposit $1,000 and we'll use Bitcoin. I don't know necessarily if Bitcoin has a credit card like that, but you deposit $1,000 into Bitcoin. Of course, the price fluctuates like it will, but you still have access to your money, and you can go to the store and use your debit card just like you'd be able to use any other debit card at that store, and it withdraws from that fund. So
now, if crypto goes up, does it put more money in your account?
Yeah, you're basically invested into that. So if crypto goes down, your balance is going to go down. If crypto goes up, your balance is going to go up. But what it is, they call it staking, and a lot of, 3 years ago when the craze was going on, everybody was wanting to mine cryptocurrency, right? You wanted to turn your GPUs on. If you had ASIC miners, everybody wanted to mine cryptocurrency to be able to get a hold of it. And I'm not going to lie, I jumped on the bandwagon. I got some miners collecting dust in my basement right now because the coins have come down so far. But the next thing they got now, so mining basically provided you a percentage of, you were earning coins as you were providing their payment system essentially, and, verifying every transaction that took place is what they were using your GPUs and your ASIC miners for. So now, with you being able to provide liquidity, if you give them money, they give you coins and interest in return for you providing liquidity. And yes, some of them have, some of the more stable coins and the coins that have been around for a while, like Ripple and Bitcoin and Tron is another one. I know some of those, they pay lower interest rates, 2, 3, 4, 5%. But a lot of the newer coins that are coming out, and I wouldn't recommend getting into any of the newer coins necessarily, but they're paying 18, 19, 20% interest rates for you staking and providing that proof of stake, which is essentially providing them with liquidity.
See, this is why a difference in age between me and Clayton is so important. Because I didn't know half that crap he just said. Believe you me, I did not know, because I look at it for you guys. I really do. But Clayton has got more of insight on that. And I'm with you. Ebert says, great insight, Clayton. I was starting to read up on mining. And yeah, my head was spinning a little bit. I was like, what, this whole staking but you know something? Yeah. I'm thinking about maybe throwing $1,000 on a card, and if crypto goes up,
yeah,
I make a lot of money. But if it goes down, well, I get smacked around a little bit.
It's an alternative, it's something to look at if you got some extra money and you're thinking, maybe an exciting or new thing or new venture you could learn about and go through that way. I mean, it's something to look at. Proof of stake or staking in different cryptocurrencies is something you could Google or kind of try and figure out, which direction you'd like to go with that.
So Sandy, what did it really tell me? It told me that there is an alternative to get into that crypto space without having to look at Riot or Mara or any of the stocks that are there. It gives me more of an insight to be able to take advantage of it. No, well, you know something? You say you lose your shirt. Why I am emphatically telling you that it is more of a speculative play.
Absolutely.
I have gone out of my way to tell you that. So, again.
I think my dusty miners in the basement would testify to the fact that it's a speculative play. Those coins, they can go up or down, and they can move big. So it's definitely something you got to have the stomach for.
And Sandy, it's making news. That's what we're all about, right?
Absolutely.
All right, let's go to the next story, man. Oh, did we look at the graphs?
No, we didn't. We didn't graph Riot and Mara. You want to graph them?
All right, yeah, I want to graph them real quick. Let's take a look. You lost Mara. That's all right. We'll put it in here.
Okay,
that's all right.
I'll bring it back up.
So give me 3 months.
Where's my? Here we go.
All right, there it is. And as quickly as it can go up, is as quickly as it can go down. All right, and Sandy is right. You could lose your shirt, but you know something? If I look at the stock above that 20-day EMA, I look at the RT above 1, from a VectorVest perspective, you want to learn how to trade these and time them being speculative. How about when that RT goes from below 1 to above 1? That could be a good opportunity. Trade it. All right. And,
Absolutely.
Talk about losing your shirt. I don't think you lose your shirt as long as you have tight reins on these, Sandy. That's exactly right. And VectorVest, if you want to be that kind of a speculative trader, VectorVest can help you with that. Do me a favor.
Yeah.
Go up to in the blank bar and type in Mara for me. And hit enter. Same kind of scenario. When crypto runs, it runs together. When it falls together. But, watching that RT go from below 1 to above 1, and absolutely right, King Matacore, this is trading. This is speculative trading. Absolutely. But we can help. That story comes out, and it's all over YouTube about looking at cryptocurrency. Can we help you with it? Absolutely. but know where you stand and know where your goals are when buying into that.
And who you are as an investor, yeah. Because it's not for everybody.
It isn't. It isn't. All right, let's get to the next story, bro.
All right, let's see what we got here. Next story, Facebook and Twitter. I don't know if you guys have seen it lately, but staying in tune with the theme of Zillennials and being on social media. I wanted to bring up these two companies because, and we don't have to talk or get into all this election stuff and worry about politics and anything like that. But, I watched this story unfold on Tuesday, and I was watching it live, and Twitter and Facebook, they're behemoths, okay? You can't turn left or right without hearing about Twitter or Facebook or reading a tweet or reading a post. And, people use social media to get their news, to interact with their friends. It's not like you open up a newspaper anymore and see what's going on. You look to your friends for what they're tweeting about what's going on. You look to different, news articles or newspapers on Twitter, on Facebook, and you look at all there. And this whole story is just talking about, privacy and their ability to censor whatever they deem censorable. So if Twitter doesn't like something you say, should they have the power to censor it and take it down? Or should they be held accountable for you posting fake stories or posting lies that potentially lead other people into believing, what you've written or what the article's about? And of course, I could probably argue both sides. Maybe you should do your own independent research on stuff that you read online, especially if it's coming from a sketchy source or something. If it's one of your friends or if it's somebody that you're not too familiar with, you should definitely look that up, do your research on it yourself. Don't go to Wikipedia and trust everything you read. And on the other hand, these guys own these companies. They should still have control of what they're doing with them and stuff like that. But with that being said, Glenn, I don't know if you want to touch too much more on this story or if you kind of want to just see, how this testimony in front of the Senate has been affecting their stock prices recently.
I got a lot I want to say.
I got a lot I want to say too, Glenn.
I know.
I don't know.
This ain't the forum for it, bro.
Exactly.
And I've already gotten lambasted by somebody talking about, Glenn, I thought you said you never talk about politics.
Right.
I don't talk about politics unless it becomes part of a stock story. All right. So I am very adamant about that as well. So yeah, I got a lot that I want to say.
Me too.
I think that the story puts some perspective behind what we're seeing on Facebook. Yeah. No matter where you sit, wherever you are ideologically, the story is the story, and it's going out there so that people understand what's going on. So we're looking at it as a story, nothing more, nothing less. It really is just a story to let you know what's out there. Now, with all of that being said, let's go straight to, as Warner Wolf would say, let's go to the videotape. Let's go look at the stocks. That's all I want to say about that, because if not, I'm finna hear it. Somebody's gonna post something. That's what I'm saying.
Let's get back in here. Let's get to the grass. Let's get to the analysis.
There you go. I'm with that. So Facebook,
and Twitter's down here.
Now notice where Twitter sits in this watch list. Twitter's all the way at the bottom as far as VST. All right.
0.78.
Look at that. It's all the way at the bottom by our master indicator, where Facebook has got a VST of 1.28. Facebook, undervalued, which is a good thing. Relative value, upside potential, good, above 1. Relative safety, above 1. What's hurting it? The next indicator we'll talk about, relative timing. It's looking at the short-term price trend of the stock. Above 1, RT above 1, the stock's in an uptrend. RT below 1, stock's in a downtrend. So fundamentally, undervalued, relative value, relative safety above 1. Fundamentally, Facebook is good. VST is at 1.28. What's hurting it right now is RT. Now, for 99 cents in that trial to the software, You look at, if I own Facebook, I know that fundamentally it's sound, but it might not be the right time to be in it. Or if I do own it, this may be a good time to play an options play by, selling a covered call or buying a married put, something along those lines. But this is the kind of information you get from VectorVest when you analyze a stock. Clayton, you can analyze Twitter.
I'll analyze Twitter in a second. Thinking about that 99-cent trial, Glenn, I mean, if you could pay somebody 99 cents to take a look at your current portfolio and break down your current portfolio and the stocks that you have in it and say, yes, this is a good stock, hold on to this stock. Or this stock's in a downtrend, it's ready to sell right now. Maybe you need to clean up your portfolio a little bit and prune it and weed out the bad stocks. I mean, if it's not worth 99 cents to have a program like VectorVest analyze your current portfolio and not look at it at an emotional standpoint, or somebody that's, Glenn, we know you love Apple, so you're going to say, yeah, it's great to have Apple in your portfolio. But if VectorVest is looking at it in a completely analytical sense and it can break it down in this manner for just 99 cents, I mean, that's worth it. That's worth it.
I totally agree.
Yeah, to clean you up and get you ready for the future. But looking at Twitter here, so it's trading at $43 a share right now, and its value is down around $8 a share. And I used to follow Twitter a couple years ago. I haven't looked at it too much. I haven't been doing any technical analysis on it lately and looking at the graph or anything like that. But this stock is definitely overvalued. It's trading much higher than the value is right now, and that's one of the things that's going to bring down these other indicators down here, especially this relative value at 0.22. So with your relative value at 0.22, this is definitely not a good long-term play. It doesn't have that upside potential that we talked about earlier when we were talking about relative value. Relative safety, however, right around that level of 1, but it's not above 1. So it's still, I don't want to say too risky, but it's still considered a risky stock because it's below 1. And we are definitely not in an uptrend right now. We are in a downtrend with RT being below 1.0 at 0.87. And of course, with all of these indicators below 1, our VST is also below 1 at 0.78. So if this is something you're looking at, or if this is something you're currently holding in your portfolio, I would give it a second look. Maybe reassess why you bought it in the first place, how long you wanted to hold it, and if you're watching it fall, how far are you going to watch it fall? Glenn, I was talking to one of my friends earlier today, and he told me he was investing in Moderna, and I think he actually had some Pfizer as well, because he was wanting to hit on those vaccine plays, right?
Right.
So he hit on it. He had the gain from Moderna and everything, and now he's just like, well, when do I sell? He said one of my biggest problems is I hold on to these losers, and then they just keep losing. So he said his biggest problem right now is he doesn't know when to cut his losers short, and like I say, weed out his portfolio and reinvest into something that could potentially move up. Because a lot of people out there, if you watch a lot of different investment advice, they're gonna say dollar cost average, buy as it goes down, because it's always gonna go back up.
That's the worst thing you can do.
When you're talking about individual stocks, who says it always has to go back up? I mean, maybe generally it does, but who says? And who says how far it's going to go down before it decides to go back up? So I don't know if he's watching today or not, but that's what he said was his biggest concern right now was figuring out when to sell and when to cut short his losers and take the profit on his winners. My advice for that would be to figure out who you are as an investor, set your trading plan, and follow your trading plan. If you're a conservative investor or a prudent investor, you don't want to see those huge wild swings. So I wouldn't recommend getting into a stock like Twitter with below 1 relative safety that's in a downtrend or anything like that. But VectorVest helps you do that. Glenn, in that 99-cent trial, you can go and you can look through the strategies of the week. You can figure out what type of investor you are. And then you can learn to analyze each and every one of these stocks, just like Glenn and I are doing right now, and figure out, yes, this is a good stock for me. I should get into this, and I'm going to get, perhaps more importantly, I'm going to get out of it when it does this.
All right. So you know something? I won't even look. I know we're going over on time. It is what it is. We do it every week. I'm not going to even look at the graphs between the two. In the space, you can clearly see that Facebook is outperforming Twitter.
Yes.
So if you want to be in that space, Facebook is the way to go. Leonardo says, Glenn, I have a question about timing the market. The MTI is above 1.7, but all the market signals are bullish. If I tighten my stops, I can wake up tomorrow and the market goes down 10%, then I don't want to sell. Why? All right, so if you're concerned about stocks that you're holding long term that could have the potential to go down, this is a time to put some kind of a collar, an options collar on your portfolio, because now it's protection. You're actually buying a put, selling a call. It's financing, buying the put. All right, so you put a collar on your portfolio, especially knowing that the market's MTI is at 1.7. I would think about doing that, especially if these are stocks that you don't want to get rid of. All right, so how can I tighten my stocks, but at the same time don't sell if the market opens as a crash by more than 10% of the open? And Leonardo, I just explained.
Yeah.
That's probably the best way to go, is to put an options play. Other than that, if you got stops and the stocks go down and they hit your stop, get out.
Right.
That's what's going to happen.
There's nothing, I don't want to say there's nothing more annoying, but it's pretty annoying if a stock comes down, barely touches your stop loss, and then rockets off of it the next day and just shoots straight up. But you have to remember that your stops are there for a reason. They're there to protect your profits and to protect essentially your portfolio. So, follow your trading plan. And then if you feel like maybe you should reassess your trading plan, if you're going forward, you're not too comfortable with what you're doing, you can reassess it later. But don't get caught up with the fear of missing out and all of that stuff, like shoulda, coulda, woulda, and that stuff. There's no room for that when you're trading.
And Chris puts up another thing, sell half.
You could.
I'm okay with that too, especially knowing that the market is looking toppy. Lock in profits on half and let the other half ride. You can do that as well. But Chris, Leonardo was like, I really don't want to get rid of my stocks. And if that's the case, I would go that options route. Let's go to the next story. Let's rock and roll. Give me the beat, boys. Free my
Next story,
soul.
we got Amazon. We don't need to dive too much into it, but basically this story, Amazon is making its biggest move in the pharmacy space. And its Amazon Pharmacy is designed to make it easy and convenient to order prescription medicine online. And there's also a savings program and free 2-day shipping for Prime members. So Amazon is entering the pharmacy space, and you can go ahead and I don't know if we link onto these articles or not, but if you want to look this up, guys, you can look up Amazon and Amazon Pharmacy, and I'm sure this is one of the top articles that's going to come up. But what it's doing is Amazon is providing competition for companies like CVS, Walgreens, Walmart, and I think GoodRx was another one, the prescription, rebates or coupons or deals, whatever they do exactly. But pharmacy stocks tumbled following the launch of Amazon Pharmacy. CVS shares fell 8.6% on Tuesday. Walgreens Boot Alliance dropped 9.6%. Shares of Rite Aid slid 16.2%, and GoodRx fell 22.5%. So Amazon is definitely interrupting this area, and they could be becoming a huge player in the pharmacy industry. So with that being said, I think we can go back and take a look at this watch list, and I think what do we have in there, Glenn? We had CVS and Walgreens.
Scroll up.
And Amazon as well.
Yep, Amazon, CVS, and
Walgreens is here.
There you go. And this is a good story. Amazon's got its hands in everything.
Absolutely.
Amazon delivers. They are the biggest delivery service of goods. How about they stream? I've got Amazon Prime. All right. And now getting into the drug business, Amazon's got their hands in everything, which is making it a more inclusive company. It's almost becoming a one-stop buying investing stock. Just think about it from that. Not really. I probably am over exaggerating big time, but Amazon's got its hands in anything.
They do.
Good RX really does offer good discounts for free and locates the closest stores near you. So Good RX, but we didn't pull that one up. Clayton, you can analyze all three of them.
All right, so Amazon, right off the bat, we can see that its price is overvalued, but I'm pretty sure Amazon has always been overvalued.
Since it came into existence.
Yeah, and nobody seems to care too much about that, but we got to point out that it is overvalued, but it's rising recently. It's up $15 today, which is only about 0.5% with that $15 increase on a $3,000 share. But so it is moving higher today. Relative value, relative safety, RT, both relative value and relative safety look good at levels above 1. RT, we could be in a slight pullback, an overall pullback here. Even though we're up today, our short-term momentum indicator is indicating a pullback in this stock. And, of course, it's bringing our VST right to a level of 1.14, which being above 1 is still healthy. It's still a good stock to be looking at. CVS. So we talked about Amazon providing competition for both CVS and Walgreens. Now, I know they had their drops on Tuesday, but it seems like they're still pulling back a little bit today. But CVS is trading under value. So if you're looking for a value play, if you're looking at something that could potentially rise back up and meet its value that we have, this could be a stock to do that. It's down only 46 cents today, but that is about 0.72%. So it's down a little further than Amazon is up, but a little different here. So RS on CVS is below 1, which indicates that it's technically more at risk than you would want if you're looking for safe stocks. So at 0.91, it's right around that level of 1, but it's a little bit riskier of a play. Relative value, we're pretty good at 1.36 here, and relative timing at 1.03, we can't necessarily say this is in too strong of an up or down trend right now, but it is above the level of 1, and that brings our VST to around a level of 1.10. And finally, Walgreens in the pharmaceutical industry, trading close to its value, slightly overvalued at $37, and its value is around $33 a share. It's down today almost 2.5%, between 2 and 2.5%. So it's definitely coming down a little bit faster than some of the other stocks on this list. And look at our indicators here, guys. Everything is below 1. So when you see everything below 1 here, if you're going to make a trade on this, it should definitely be a speculative trade. I don't have the graph up. I don't know if any of you guys short stocks out there, but this might not be a good investment for any of you to be making with everything below the level of 1, including RV, RS, RT, and our master indicator VST.
Do me a favor, right click on them.
All of them? Yep.
Yeah, just on one. Yeah, and view the stock graph. Now, somebody did put in, we almost put this story in, go to 3 months. We almost put this in about Walmart. Walmart plays a role in there as well, but we went with the bigger names that are out there. Look at Amazon. Is the story helping to pull it up yet? Just quite yet? Not quite. I would wait to see if the stock can get above the 20-day exponential moving average. RT is below 1. All right, it's totally below 1. That's a good indicator, especially if you're a subscriber to the software. I think that's a great indicator to give you a heads up on when it's okay to be in the stock. So the news is there. It has its ebbs and flows, but look from that high. Look from that 3-month high. Look at where the stock is trending. The stock is trending lower. We're not hitting it. We're hitting lower highs all the way through. So be careful with Amazon. Let the trade come to you, but maybe the story could push the stock's price higher. RT is below 1. Let's go to the next stock. CVS had a little bit of a bump up above the 20-day. Where's it at now? Pulling back. Look at where the wick of the today's candle is. It bounced right off that 20-day exponential moving average. I love technical analysis, folks.
Oh yeah.
I really do. It bounced right off. RT is still above 1, but getting close to telling you that the stock's in a downtrend, but still above 1. And actually, after it gapped up 4 days ago, it hasn't recovered. Do me a favor, put earnings on there, all the way over to the bottom left. No.
Oh, sorry.
Bottom left. Was that an earnings play? No, the earnings happened a few days before that gap up. So I'm not sure what happened in that gap up, but it gapped up and then it just pulled back. And look at the gap the day after it gapped up. Look at the big volume on that down day.
This is when Amazon announced the.
Okay. And there's the big volume. People said, "Oh no, I'm getting out of that stock." Ooh, no. and even with that, Amazon didn't blast up.
No.
All right, didn't really blast up. So, and go to the last one. Same thing happened with Walgreens. It got smoked. It got smoked the day after the announcement. Currently, it's below the 20-day exponential moving average. It got hit hard enough that RT went below 1. RT went below 1. The stock's price blew through the 20-day exponential moving average. So those two I'd be careful with. But Amazon is not faring the most out of that either. It's still in that downward trend. So Amazon just came in and mixed up the whole industry, and now the industry is going,
what do we do now?
What to do?
We got to compete against Amazon.
Says, what do you do, George? I don't know. What do you do? All right, let's get to the next story.
All right, next story. And then these major retailers, this was the last story that I picked out for the day. And I'll just summarize it. I know we're over 3 o'clock right now, but just to summarize this, we've been dealing with the coronavirus and this pandemic for almost an entire year now. And there's major debates between essential workers and non-essential workers and so on and so forth. So this story is all about retailers and how they're treating their employees. They're giving them bonuses, they're giving them raises, they're helping them out all across the board. And, they are saying that we appreciate you. Here's what we're going to do for you. And I'll take the first, 3 companies off this list here. Starbucks, everybody's getting a 10% raise. And starting, if you work at Starbucks, they're getting a 10% raise. If you've got 3 years of service there, you get an 11% raise. And if you're just starting out, the starting wage at Starbucks has been increased by 5%. So Starbucks definitely is trying to say, we appreciate you guys and what you've done and being able to come to work every day through this. Dollar General is next.
Dollar General should give everybody a raise because everywhere you look, there's a Dollar General. You can go in the middle of the night to somewhere and say, "Oh, there's a Dollar General." So I'm just putting that out there.
Yes. So they're giving away, it's for the full year, the estimated increase in pay is $173 million. And I looked up their numbers on how many employees they have. I think they got somewhere around 140,000 employees. So, but obviously I don't know how this money is going to be paid out. This article didn't say if they're going to get a direct bonus, if they're going to get an increase in wages or anything like that. But you guys can do the math. I did it. If it was split up between everybody, I think it was like an $1,100 bonus. But unfortunately, I know everybody's not going to get the same bonus. So working at Dollar General, you don't just get to look forward to a $1,000 bonus this year. But $173 million on their 140,000 employees, it's definitely a chunk of change. And then Home Depot. Home Depot has done extremely well during the pandemic. And I was reading up on it and trying to see, maybe why. And it said a lot of people, they're not taking vacations. So what they're doing is they're spending their vacation money on home renovations. So Home Depot has drastically increased their sales over the last year. And the number here, they're being able to invest $1 billion in incremental compensation. So they're going to be increasing their pay by $1 billion because of how well they've done during this pandemic. And it goes on for a few more companies, but I think, Glenn, that these are the 3 that we've got in the watch list right now so that we can see, what their stocks look like and, if this story or how they've been affected during this pandemic.
Go ahead. Let's go look at them. David said Home Depot beat earnings but dropped because employee costs are going up. David,
Employee costs definitely.
this could be a reason why their employee costs are going up. They beat earnings, and I go shop at Lowe's because they give me a big discount for being a veteran. So I'm prefer Lowe's, and I'm a Jimmy Johnson fan for NASCAR, which he retired this year. So I look at it. It's amazing how you follow a car and you now have loyalty to the driver.
advertiser.
Oh yeah, big time.
Yeah.
So I like the idea that they are looking after their employees. If you looked at the beginning of that Starbucks story, they have been hurt this year because of this, and they're still taking care of their employees. I think that's huge. So
It is.
this is a feel-good story that companies are out there taking care of their employees. Not everybody can afford to do that. All right. But let's start off with Dollar General, clearly undervalued, trading at 210 with a value of 308. Good upside potential with RV at 1.56. Good safety with RS at 1.4, and the stock's in an uptrend. That's a good, solid company.
Yep.
I don't care what you say about, and I said it, about all of the stores that are all over the place. They are a solidly run company. And I did a story on Dollar General in the past on Trending Thursday. They reinvest their money back into their company. They are a good run company, folks. And I look at their growing their earnings at 22% a year. They are really a really good run company in that space. Home Depot trading at 270, value at 289, relative value above 1, relative safety above 1. Stock is pretty flat right now. All right. They grow their earnings at a clip of 14% a year. Good run company. Let's go look at Starbucks. Starbucks is trading over its value, though. That means people are willing to pay a premium to own the stock. We look at the relative value. Man, relative value is not that good. All right. We look at things like earnings and earnings growth rate to get a relative value. When we look at relative value, or when we look at value, actually. But the relative value is low. The safety is above the value of 1. Safety looks at a company's ability Relative safety is an indicator of a company's ability to beat or exceed earnings expectations. That's what I look at. And of course, the stock is in an uptrend. So I like that it's got good safety. It's got an RT above 1. I'm not sure I want to hold right now Starbucks long-term because relative value is below 1. And look at their earnings growth. They're losing money on earnings. All right. And even with that, they're still willing to take a look at
take care of their employees.
And take care of their employees, man. So it's up to you if you want to look at the graphs. I like all three of these. Starbucks, not as long-term, but Home Depot, Dollar General, taking care of their people, but they're solidly run companies. They have the ability to do that.
No, I don't think we need to take a look at the graphs. I think the analysis is straightforward there. We know Home Depot has done very well during the pandemic, and Starbucks obviously got hit like a lot of retailers and a lot of restaurants did. So it's pretty straightforward.
I got you. All right, let's go to the last two stories. You know me, I always like coronavirus stuff. All right. AstraZeneca, COVID-19 produces strong immune response in older adults. Everybody's starting to get into the game now, bringing their vaccines to the forefront.
That's what I was thinking.
You got Pfizer, you got Moderna, now AstraZeneca. There's probably one or two more that are saying that they're bringing their drugs to the forefront. If you look where it says reference symbols down below, you got PFE, you got Moderna, you got BNTX. But the experimental COVID-19 vaccine being developed by AstraZeneca and the University of Oxford produces a robust immune response in older adults. Data from mid-stage trials have shown. Again, I think on the next Trending Thursday, that email that I got from a subscriber, I'm going to talk a little bit more about how hard it is to actually put this out there to the world.
Yeah.
All right. Let's go to the stocks. Let's go look at them real quick. Did you have anything you wanted to add to that? Yes or no?
No, I don't need to add anything to that.
Okay. Look at what the number one stock in this watch list is.
Moderna.
What's Glenn been talking about as far as his favorite company in this space? Anybody want to type it in the room? You ain't got to type it in the room. It's been Moderna. I've liked this stock since we've come out since we came out with the coronavirus watch list. It's been a tough stock to hold on to. But actually, that's right, Sanjay. This was the stock that I was looking at from the beginning. The stock is at 94 and value at 99. So I'm going to call that more fairly valued than undervalued. Relative value at 1.5. Stock's got good upside potential. And it's hard to find a good pharmaceutical company with good upside potential, but this is one of them. Relative safety, just about at 1, not quite there. So I'm going to still consider that unfavorable. But relative timing, the stock is rocketing up. It's got a relative timing at 1.65. And as a pharmaceutical, they grow their earnings at a clip of 38%. And as Clayton was showing, it is the number 1 stock in this list by VST. Is everything I've always liked about Moderna is the analysis behind it. And I'm loving that it's the number 1 stock in here. Let's go down to Biontech, which is hooked up with Pfizer, trading at 94 with a value of 137. So it's clearly undervalued, which is cool. The upside potential on the stock is favorable at 1.16. It's got good upside potential, not nearly as good as Moderna. Relative safety at 0.90. Both of them have a safety below below 1.
Yeah.
And it's moving up in price as well. We did talk about Facebook already, Amp. That was one of Clayton's stories. We did already talk about Facebook. All right. Notice that its earnings growth is at 2% a year. All right. It's only at 2% a year, not nearly as strong as Moderna. And let's go down to Pfizer, trading at 36 with a value of 34. All right, I'm going to call that fairly valued as well. Not as strong as the other two. It's got a relative value below 1, relative safety below 1, relative timing below 1. And this is a pharmaceutical that, it's got a lot of drugs out there. And unfortunately, they're not growing in a positive way. They got negative earnings growth rate. All right. I'm not, Clayton, you can look at the graphs and analyze the graphs real quick. We'll go to right click, just analyze the graphs real quick.
All right, let's.
Now you can put it on whatever time period you want. I like 3 months, but that's up to you.
No, we can do a 3-month graph.
Okay.
I like, in looking at pharmaceutical companies like this too. I mean, when you can see a graph that looks like this over a year on a pharmaceutical company, going from bottom left to upper right, of course you're going to have some volatility in pharmaceuticals. But, I mean, this is the type of graph you want to see right here, bottom left to upper right. So we can go down to a 3-month graph, and it definitely looks good over the last 3 months. And maybe, I think Moderna was the last one to come out with their announcement about the vaccine, which was probably this jump here. But I'm going to assume, and I could be wrong, but it was a week or 2 ago that Pfizer announced their vaccine. And maybe investors started to think that Moderna was getting close as well. So it started to trend a little higher here and then popped up when they did announce their vaccine. But with everything above 1, with the announcement of the vaccine, and of course you're going to have a little bit of pullback. When stocks gap up like this, especially on pharma news, a lot of people are taking profits. So over the last, over the 2 days following, this could be some profit taking. And now, or people could be thinking, Glenn, you were talking about reading that email about how hard distribution of the vaccine is actually going to be. And this could be people, maybe realizing that, taking profits, and so on and so forth. But being above 1, being above the 20-day exponential moving average and moving higher today, this stock is definitely in an uptrend. It looks healthy. And, bottom left to upper right, you can't ask for more than that. Same deal here. This would be when I would assume Pfizer and Biontech announced their vaccine maybe last week or maybe 10 days ago or so. And it's been pulling back a little bit ever since, but it's stopped right around this 20-day exponential moving average, and it's starting to bounce back up above it today. And volume slightly down today from where it was yesterday, but it's starting to pick back up a little bit. RT crossed back above 1.0 since the 17th, and it's on the rise. So, like I say, you're going to see these pullbacks after these big announcements like Pfizer's got here. This is when they announced the vaccine. They jumped up. They opened higher, but then they closed the day. This will be
lower than the open.
Yeah, they closed it because it's filled in. So they closed the day lower than they opened, and they've really been continuing to go back down, and they're kind of consolidating down around here, around this 20-day exponential moving average. But with Pfizer, we can see that the RT's below 1, down in the 0.80s somewhere, 0.82 it says right here. And it's kind of trending sideways. It's not really going higher. So this stock is definitely losing steam at the moment.
Do me a favor. In the blank box, type in VXRT. That has been Vaxart has been a big mover, but even looking at that mark, bouncing above the 20-day exponential. RT is not above 1, but it's at 0.90 or so. But that has been a stock back in the upward trending days. We've made some money in the Jockey Club with that.
Nice.
All right. So tell you what we're going to do. Let's go back into the software. Let's go back to the homepage. I think that we're going to be done for the day.
Okay.
All right. I don't know if we're going to do. Joey, are you here? I don't think I'm going to do stocks today. We're at 321. I don't think I'm going to do stocks today to look at, but the next one we do, we will. And this was, a little different than what we normally do. And again, I seriously thank Clayton tremendously for helping me out.
Glenn, I thank you for letting me help you out, man.
I appreciate it.
I have so much fun doing this Trending Thursday with you.
Well, I want to see more likes in there. I do want to see more likes in there. I think Clayton brought a lot to the table. And for what he does out there in our YouTube channel, he's doing the intro to investing. He's doing explosive stocks. He's got a lot. He carries a lot in the YouTube channel and helping the channel to grow. So I'm telling you, if you're not currently tuning in to Clayton, you need to. He's got videos out there. Look at him. He talks a lot, but he gives a lot of great information. We both talk a lot, believe you me.
Yes.
We both talk a lot, but I love that. I love what Clayton brings to the table, and he will be a guest. He's been a guest on Trending Thursday a few times, and he will continue to be a guest. And there's the likes are pumping up. I appreciate that.
Nice.
And with that, Clayton's going to have to close this out because it's not me. So when we do, I'm going to sign off with adios, arrivederci, ciao, au revoir, sayonara, aloha, salam, shalom, namaste, peace. We're out of here, folks.
I like that piece. And Glenn, thank you once again so much. Just to end it here, I want to say thank you so much for having me on here. Everybody in the chat, sorry, I'm still getting used to all this with looking at the chat. Glenn, you're a pro by now. You can, man, you got focus on the chat. You can look at the program. You know where the camera's at. You know all that stuff. And hopefully one day I'll get half as good as you are, man. But I want to thank everybody. And I don't know if Joey's listening or what's going on with there. But guys, next time you see Glenn and Joey on the stage here, make sure to thank Joey for everything he does. Because if you didn't notice, man,
it ain't easy, is it, bro?
I'm telling you, that dude just makes sure this thing goes flawless. And I'm up here in Ohio, Glenn's down in North Carolina. The way that he can just make everything flow so seamlessly, and he's behind the scenes, so maybe he doesn't get as much appreciation as he should. But I'll tell you what, that guy surely knows his stuff, and he makes sure he takes care of both of us. But with that being said, Glenn, I'm going to cut it out here. Thank you so much for everything and having me on the stream today. I hope all of you guys in chat, you guys have a great day. Continue to follow your trading plans. And until next time, Joey, until next time, guys. Or until next time, Glenn and Joey. And until next time, guys, I hope all of you have an awesome day.